morning, traders. Welcome to the TMT Stock Market Strategy video for Friday, September 23rd. We did get a little bit of follow through from the Wednesday interest rate decision to the upside, and that all of the gains really were the gap up, and that's usually what happens. Markets of late, they either gap up and all your gains are right on the opening, or same thing, gapping down and all of your losses are on the opening. So kind of frustrating for the day trader every once in a while, but we are building energy, and I do believe that the markets are really, really ready for a really big move going into the fourth quarter. Now, we are coming to the end of the third quarter next week, so we still got a full week of trading, so it'll be interesting to see what happens. Let's get right to it. I do not have any indicators because really nothing has changed. I'm not going to sugarcoat anything. I like to just get the hard analysis done, and then we go from there. All right, so here's the dollar, UUP, as a dollar ETF, and you can see here we're in a symmetrical triangle. I never count the dollar out, especially when you have some uncertain times and you have volatility starting to pick up, because a lot of market participants and large funds and managers like to park money in the dollar ETF or just the dollar, the DX itself. So I don't see too much of a movement, maybe the 24.20, 24 even if it were to go. But if this symmetrical triangle is going to break, I think it might break to the upside here. Okay, so we'll, again, one step at a time. Here's the GDX, and you can see here we had a pullback to not even a 38% retracement, which I'd like to see. That would be that 200-day coincide nicely with the 200. So right now we're just in this sideways channel. You can see here from the upper end of the range of 28.73 to the lower end of 25.40. So if anything, maybe a back test this area here, but I don't see any excitement or another big push to the upside, at least at the moment. I do think GDX, GLD, and gold itself, the ETF, and the GC contract are in the second stage bull market, but we need a little bit more of a pullback for me to get excited about looking to buy gold. GLD, same thing. You could see here we have a descending triangle, right? And making lower lows and lower highs. We do have that double top here that measured down to 120, I think it was, the 119 and a half. So we're still looking and anticipating for a big. I'm looking for a flush lower. Now, obviously, things do change and things happen, but if everything stays status quo, I think that you're going to see GLD and gold break down at least one more time, and I would love to see a 119, 120 print right into this area here. That's GLD. Spiders ETF, we had that pennant formation and we broke to the upside. You see that gap, and that was pretty much it. Remember, guys, the free money is just about over. Don't get too excited about looking to buy and adding to your portfolio. I personally would be waiting for a deeper retracement before anything. The market just rallied because Janet Yellen said she's not cutting rates. But more than likely, she's going to probably go in December. And if not, definitely, I would imagine, the first quarter of 2017. So I wouldn't really get too nuts about about looking to keep buying here. If anything, I think you get a gap fill in this area, which I mentioned. I mapped out a plan, 218.20. It's maybe another dollar, and even if not, I think we can even get a pop and then roll over, fill this gap, and start looking to get back down to the lows again. But again, price is king. That's what pays us. So I want to show you this is exactly what happens here. We gap up, sideways, and you can see here pretty much the same here. Gap up, sideways. We did have a little movement here about last week, but you could see we just been going nowhere for 2.5 months, guys. Literally going nowhere. And then that one move lower, and we consolidated yet again, and we did have a pop up on Friday. On Thursday. So we'll see what happens if this has legs, but it looks like to me consolidation is the key here. Every move, it's been consolidated. So we shall see. Nice big doji on the transports, the IYT. You could see here that we really need to get going here. I mean, this to me is looking a little weak. However, you can look at it this way if you really wanted to, and clearly this could also be an inverted head and shoulders. And that'll just wanted to show you guys this. And this is a bullish pattern here. And of course, the neckline would come from here down to here, and it would have to break out right up in this area here. So it's possible that it's creating a nice big inverted head and shoulders here. But again, it's only going to break. It needs to break to 148.80, 146. Okay, and the IYT. But right now, you can see there's really no momentum here. And that's the concern that I have, unless it does break that inverted head and shoulders that I just pointed out to you guys. Next is going to be the IWM. It's doing pretty well here, challenging its highs, and its seasonal time of year comes into seasonal strength here in the IWM. And lastly is the Qs, every day making now new all-time highs. Again, I'm not a big fan of buying all-time highs, nor I think you should be either. Take a step back a little bit, let the market digest, see where this market really is headed before you start putting money to work at these levels here, okay? These inflated levels, I should say. All right, guys, have a great day. Enjoy the weekend, and we'll see you on Monday.